Hi, welcome to the Market Alert for Friday, the 24th of February 2022. So I think this headline sums up really what we all felt yesterday. Max frustration. I have never seen anything like it in 30 years of actually looking at the markets, trading the markets, analysing the markets. Never. We've got the whole world falling apart. We've got war. You name it, we've got it. And I have never seen anything like the manipulation I have ever seen. It can be nothing but that we saw yesterday. And for those of you that say that it's not possible, etc., let me just give you a bit of a background. There is a thing called the Plunge Protection Team. You only have to do a search for it. It's called the Working Group on Financial Markets. And this was created by Ronald Reagan way back after the 1987 crash. I'm not going to read all of the reasons why behind it, but basically they wanted to be able to control a crash after the one of 1987 took everybody by surprise. And blimey, didn't we see this happen yesterday with the Plunge Protection Team? Let's just have a look at this. This is the Dow cash yesterday, and you'll see that it actually finished up 92 points, which is absolutely incredible. And this is the closing price for yesterday. You can see there, 24th of the 2nd, 22. The market opens at 2:30, closes at 9 p.m. That's GMT. So let's have a look at the chart. And I'm using the range statistics tool here so that you can see. And I've just clicked on yesterday's bar, and you will see that yesterday's range was 1,042 points. And they brought the market back yesterday, 1,042 points. And Russia are blowing up Ukraine, killing people, maiming people, destroying the infrastructure, and yet the market managed to come back yesterday 1,042 points. It's just absolutely incredible. I saw the start of this because I was actually in it, and I'll show you that in a moment or two when we look at the German DAX. I've never seen anything like it. As you can tell, it's just absolute insanity. You can see the volume for yesterday, absolutely massive. Market down, market back up. And that's why I think the headline was put out for maximum frustration, because everybody in the industry is just like sort of looking at it and going, well, what happened there? Never mind when we get to the metals market, which you will probably have already seen. So anyway, the Dow was brought back yesterday. The question is, can they hold it? Like I said, that we've got hyperinflation. We're going to have even more inflation now that crude oil is $105 a barrel yesterday. Petrol prices at all-time highs. The knock-on effect with Russia, with exporting of wheat to basic commodities. It's just insane. And yet the market's recovered. I tell you what, if we had a situation where Putin waved his a white handkerchief, we'd see this in one day. Because that's what the market wants. That's what the elite want. They want the stock markets to remain on the highs. Because the stock market's crashing and moving lower is a sign that the system has failed. And the same allowing gold and silver to move higher. It's a sign of failure, and they don't want that. And just have to look through this. I mean, there's no big deal in the monthly chart yet. We're only down to the 20-bar moving average. Well, a long way to go to get down to here. But amazing. A virus can do this, and yet all-out war and the prospect or potential for it to actually accelerate and become worse, and others involved, and the market comes back 1,042 points. Amazing, absolutely amazing. So if you ever wanted proof of manipulation, it's here. And if I sound exasperated, I am, because I've never seen anything like it. Nothing like it. There's just absolutely no rhyme and reason. It should have finished down here on the lows. It should have closed on the lows. But the assistance of the Plunge Protection Team moving in and bringing it back. And here's the 30 minutes. We had the move down in the pre-market session. The New York traders came in mid-morning, and this is where they came in, and all they did was hold the market. Let me just redraw that for you just to show you. So the Dow traders and the S&P traders are in, and we're oversold, which is fine. We've got the demand coming in here, and then they bring the market back. We get the correction, and then off we go from the mid-afternoon. It's just incredible. And then all evening. That's a classic. excuse me, the classic is bringing the market back before the close. That's that, you know, when the plunge protection team are in. During the day, there's no point. They just let it continue because it's like trying to catch a falling knife. But when they can see a gap to actually bring the market back, they start selling the VIX volatility, and that then brings stability to the market. And that was another thing as well. The implied volatility went, it was just absolutely barely moved. In fact, it was lower than the previous day. Again, I've never seen it. Never seen it. You'd expect it to spike and go through the roof, and it didn't. But there you go. That's sort of the background to yesterday. All out war, people dying, get the stock market back up. And that's what they did, and they managed to achieve that. And it was actually perfect again as far as all of the ratios. So from there to there, we come back to 78%, and off we go. So yeah, incredible. Let's have a look at the DAX for yesterday. And we see the same thing. Obviously, we've got a huge bar. Didn't make it back to the close of the previous day. A bit of support overnight at the moment. And in the 30-minute chart, again, you'll see we've got a double bottom there. And then follow the plunge protection team. A lot of activity down here in the 30-minute chart where it was oversold. And then it was brought back mid-morning down to where the Dow traders came in, where we were oversold again, and then moving to the upside there as well. So let's just have a look at what we could see today. But we've got the DP level there. The objective is going to be to try and get to the high, I would have thought, of yesterday first. And if not, then we've got to watch the DP. That's going to be the first downside target. I'm not expecting it to be as volatile as yesterday. That would be, I don't think, possible, unless the only caveat would be unless something happens between the UK, Ukraine, and Russia, that it was taken up a whole new level to some sort of major bombing or something, or deaths. But that's the only thing. But not that humanity really humanity is irrelevant when it comes to the market. So as we saw yesterday. So yeah, I mean, we're going to have to wait and see what the futures market does, how it's going to pan out. But the areas to watch out for, obviously, is the DP, and anything on the upside is yesterday's high. And if they take that out, then they can continue to move to the upside. But it'll be interesting to see if they can bring the market back. I'm using the 30-minute chart because obviously any smaller time frame at the moment difficult to see because of the amount of movement we've had in the market. I'm just going to tone down as well the psychological levels because we have so many in there at the moment. It's just making the chart a bit messy. There we go. So you can still see them. So yeah, this is the sort of areas of where you'd expect the market to come back to if there is a bit of a sell-off, and we take the DP out, then 89. As you can see yesterday, we had a lot of support in this area as well, and that's highlighted here as well. And that's still a good move to the downside. That's no small move at all, from there down to 89. I'll just draw this over here. And that's still nearly 300 points there, as you can see. So let me just show you what happened in this area yesterday. We had the GDP figures from the US at 1:30. They came out at the forecasted price of 7%. So here we go. Then I was short. This is the bottom for yesterday in the 5-minute chart. And this was after the GDP numbers came out. The market sold off and then came back. And we had a rally off the numbers, which you'd expect. And then I thought, well, we're going to get another pullback before, things start to move to the upside if they're going to. So we were overbought. We got all the usual stuff in there. We've got the supply coming into the market. You can see prices have come off the high. I actually shorted before we started to move down using the 1-minute chart because we'd turned red. This is not the MDI. These are just regular candles, but they turn red. In fact, I may have a picture of that in the in here, and you'll see the 1-minute chart. There we go. So we turned red there, and again we were overbought and we had divergence. And as it turned red, I actually sold, and then I shifted to the 5-minute chart because I was hoping that the market would continue to move to the downside. So you can see there it started to move, and I've moved the stop to break even just in case we had one of them big 50-point bars in less than a minute that we'd had during the day. And then I was just waiting to see what would happen, and I'm going to fast forward this. I've got demand coming into the market. That was the first sign that something was coming down the line. We were also heading towards the market being oversold in the 5-minute as well. So the you'll see there that we've got the BRN being breached. The market then coming back below this. And then we shot down. I thought, oh, this is good. We're heading in the right direction. But this was the last time that the market hit the 78% in this area, because as soon as the Dow came in, the plunge protection team were ready. And you'll see this in just a second. Or they've been asked by the institutions to, the Fed had asked the institutions to start buying. So there's the Dow kicking off. We moved down lower, and we thought we were going lower. And then the Dow just did this massive reversal. And if I can just get to this timeline here, you'll see me jump out. I mean, that was it. It was a case of, right, well, I'm out. Because I could see from that down move, normally we've had in the Dow, it shot down 200 points and then come back. And that's the only reason why I stayed in. I locked in some profit just in case, but the market did a straight reversal off this, and then the rest is as we saw before. It came straight back. So I was out, and the market just continued to move to the upside, as you see there. So a good move on my part, and again, it was using everything that we've got in the software, further demand coming in, and knowing that the plunge protection team are likely to be out on a day like today, but not so soon. So like I say, whether there was a nod from the Fed to Wall Street to buy, and they would assist later on with the plunge protection team, I don't know, but it just had that feeling about it, that they were going to try and bring the market back, and that's exactly what they did, and they did it very successfully as well. So let's have a look at a few other markets before I finish. It's a bit of a long one this morning, but it was an interesting day to say the least. Japanese yen, pound yen, trading down to 89%, 200 MA, bang on it, and the market then moving back up yesterday as well. There's the inside of the 89%. You've got in the daily, you've got 89% in the 5-minute oversold. Climatic volume, you see the buying coming in, and then reverse, and that moves higher. And there's your 30-minute view of it. Again, oversold. You've got lovely divergence there as the market comes down to there. We've also got demand. We're at the BRN, and then we switch and they bring it back. And not too dissimilar in the pound, except we went down to 78% instead of 89%. Inside of the 5 minutes, we were seriously oversold. We've got the demand here. If I just compress the chart, you'll see there we've got the demand and the crossover. This is at 78% in the daily chart, and that's why it's important. Again, reversal off that. There's the 30-minute view of it as well. Only one bar in the 30-minute closed above the 5-bar moving average. They tried to hold at this level, then it was shook out to the 78% in the daily. Again, oversold, and then brought the market back. Right, now a quick look at the metals and the insanity of yesterday. The silver market was making lovely progress. It put in a high yesterday. Let's just grab this high, see what it is. It was 25.61. And that was trying to get through the resistance to the left, wasn't it? There we go. We've got this resistance here. We just put on through there. So we got through the 40, make it 25.40. And the market was just absolutely hammered. Now, interestingly, the market has come off the 200 MA overnight, which I'm really, really surprised by, because of the carnage yesterday. Now, I've done a bit of research And it appears that Bank of America were 800 million ounces short, were a billion out of pocket. Now, this again comes back to intervention maybe by the Fed, because the last thing they needed was a default or a force majeure on the exchange. So I wouldn't be at all surprised if there wasn't some assistance here to actually tank the market so that they could actually get back some of their losses. And they would have got back all of those losses as well with that move yesterday. $2 move to the downside. But at the moment, unless they've hedged it now, the Fed have said, look, you only get one chance, and they've hedged it. I don't know, but we were oversold and all the usual stuff there. And the market is now making its way back to the upside. With a slap on the wrist, no doubt, to Bank of America, putting the financial system in jeopardy. Same in gold, hammered. Again, you can't make this crap up, because you've got a situation, I say, the world's falling apart, hyperinflation, and gold's hammered down. I mean, this is again, you just don't see a move like this. You know, we've got, what is it? It's got to be $100 or more. Yeah. $100. $98 on that move. Unbelievable. But again, fighting its way back to the upside at the moment. Let's have a look at the dollar, because this was obviously, again, engineered by the Fed. Ramped the dollar up massively, and then they couldn't hold it. So now looking weakish. This is where this is going. That's where it's going in the long term. Off the charts, off the bottom of the charts, because of the amount of money they've actually printed. But yesterday, managing to hold. Being assisted to hold to the upside, let's put it that way. But at the moment, you can see they obviously, as soon as the assistance came out of the market, it got sold into. That's for sure. And then finally, a quick look at crude, up at 105 yesterday, likely to return to the upside after some profit taking in this market as well. But yes, anyway, a very interesting day yesterday, very interesting indeed. Let's hope it's less volatile today, because it was insane yesterday and exhausting watching this and actually trading. It was a good day, but it was a very, very mentally draining, particularly when you in the afternoon, when they managed just to absolutely hammer silver. As soon as it started, I thought, here we go. I've seen this before, but to actually hammer it down $2 was something else. Anyway, that will do it for this one. It's the weekend, so have a great weekend. Have a great day. And as ever, thanks for watching, and I will see you in Monday's Market Alert.